So 3 clues here: inside day, bear channel, and 8:30 bearish news. Let's take a look now and see how we did. Now this is my 34 range chart. I've got all my levels marked up automatically on this chart. It's a great tool we use called the auto levels. So we have import-export prices, very important. They came out higher than expected. Higher than expected, like I said, is crude bearish, it's dollar bearish, and we are already in a bear channel. So when I see price speed up, we make new lower lows. First thing I'm doing now is knowing this is a bearish news report, knowing we're in a bear channel, and of course also knowing that the speed is now picking up tremendously here after 8:30. So where there's speed, where there's big sellers, I want to be selling retracements. We make a new lower low. I'm going to wait till we again retrace off those lows. Momentum will curl over, and I'll grab our first trade short. At 8:40 this morning, I make 20 ticks times $10 per tick is 200 USD, and that trades with 4 contracts. Now the big thing today was at 8:40 and at 8:47, you'll see here one pullback. I'm sorry, retracement, 2 retracements. We break below the 86 big round number, and I get short here again at 8:47. So at 8:40, we make a new lower low after news comes out. At 8:47, another lower low after that news came out, right? And those are both 2 wave pattern shorts, 20 ticks and 35 ticks. Now, again, if you recall this morning, relatively easy trades, but we were looking at tape reading this morning, right? We were reading tape. We were reading tape, seeing the reaction to the news. Didn't even care about what the actual news was. We were reading tape, seeing lots of sellers, right, showing up on the tape. Now remember, we have this channel low down here, but we also knew we had the open. Now, what is the open? Well, first of all, I use a 12 a.m. start and a 12 a.m. finish to calculate my open. All right, Eastern time, of course. So 12 Eastern to 12 Eastern, right, midnight to midnight, that's my open. Now, this is where I got a little bit aggressive on this last trade, right? The third trade after the news. You'll notice it was higher risk at the lows of this channel. New lower low, I'm going to sell a retracement. Again, we called it higher risk. We knew the lows of the channel were right there. But the reason why we did this, again, bear channel, crude was bearish news, and then the open down bottom is always a price magnet. I'm always going to try to get that open as my final target, right? It's a great price magnet, and usually it'll go down, test the open, and then come right back up. All right, so I tried it, 852. We get 0 ticks out of it. +5, -5, +10, -10. And again, new lower lows. We sell the retracement. We know it's higher risk. But again, the compensating factor, the news, the channel, and the open. Now, here we are at the lows of that channel. And of course, at this point now, I already know this is a higher risk wave short. I mark up my swing high right there. And then you know what we're trying to do? We're trying now to buy the lows. Now, why we buy the lows? Well, inside day for one, right? Be careful that fake out breakout. And we're now at major support, and we just saw as the buyers are coming in with a vengeance, we have a higher low. We're getting some divergence firing off there. We're reading tape. Very sloppy right here, right? Very sloppy as this transitions now. Because remember, this is nothing more than a transitional area here. Okay, this is when the buyers are trying to claw their way in. The sellers are saying, trying to hold off those buyers, and the sellers want to keep this thing going down. So right when they break through this line in the sand. Now remember, swing highs, we use swing highs for what? As a sentiment confirmation.